Good afternoon, everybody. Welcome to the Moving Markets Podcast. It is Tuesday, February the 24th, 2026. At the time I'm starting to record this, the stock market has about 12 or 13 minutes left to finish trading today. So we're just about a little more than 10 minutes away from the closing bell. I'm glad to be back online, glad to be back on the podcast. It has been a rough few days. I got hit with a sinus infection, head cold about Wednesday last week, and it was brutal. I'm shy of 58 years old. I can't remember in my life having a sinus infection or a cold that hit me this hard. It was just more severe than I've ever had. I tested and came up negative for COVID. I did not have strep throat, which was one of my initial suspicions, something that I thought might be the case, but just a really, really bad sinus infection. I'm on an antibiotic now. It was severe enough that my doctor actually thought that was smart. Feeling way better today. Still, my voice is rough. You can tell I'm still a little bit nasally. For that, I apologize. But I'm happy to be back. And the reason I'm starting out the podcast this way is because a lot of you, because of the notes that I put on Discord, a lot of you sent me messages there and sent me some personal well wishes, and I greatly appreciate that. I really sincerely, if I didn't respond to every one of you, I apologize, but I do greatly appreciate it. Okay, so it turned a corner for sure. So we've got, with a little more than 10 minutes left until the markets close today, we've got the Dow Jones Industrial Average almost up 400 points. The S&P up 55, the NASDAQ up 245. In the case of the Dow and the S&P, both of those are right in the neighborhood of 0.8%, which is a very good one-day move. Not like the move it gave up yesterday going in the other direction, but a good piece of it back at least. And the NASDAQ up a little over 1%. That's a really good move for the NASDAQ. There is still, I've noticed as I watched the financial news stations today, as I've listened to things throughout the day, read things throughout the day, I noticed there is a lot of varying opinions on the AI disruption that has dominated our conversation so much of the last 2-3 weeks. My comments on this podcast have had to do with AI, because AI related stuff seems to be what is driving the markets for the most part, good or bad. And it's been a little more bad than good over these past few weeks. But there's dissenting opinions and strongly dissenting opinions. I don't remember him by name, but a person that I see occasionally on Fox Business News this morning was talking about AI. Yeah, it's a disruptor, but more of the disruption is going to be for good than bad. It's going to produce and create so much more than what we need to be fearful about being taken away. He's quite honestly polar opposite of some people who are saying AI is going to ruin everything, and it's going to be the end of entire industries as we know them. And it's just, you've got this wide discrepancy. And then there's a lot of people that are somewhere in between, some on that doom and gloom end, and some much more on that optimistic end. But whatever the case ends up being, it's just right now, it seems to have been a little more negative than positive for the markets. The S&P continues in a very tight pattern. The range was up here, and then after that one really big, huge, ugly sell-off day about a week and a half ago, now the range is tighter, but at a slightly lower level there. The Dow Jones Industrial Average looks a little bit different, because I think the move yesterday, not a whole lot different, a little bit different, but the move yesterday on the Dow, I think, was a little more exaggerated. It had a massive sell-off day, enough to take technical crossovers on the 5 and 20-day moving average into bearish direction. Although that RSI at 50.21 is technically not crossed over bearish yet. So we'll see what happens. Today is certainly a good sign that the markets want to remain bearish, but no guarantee that they will. The NASDAQ is NASDAQ is rough. It's been what's gotten beat up the most with this AI news, the AI fears. It's taken its heaviest toll on tech companies because that's where the largest part of the disruption is literally taking place in the tech sector. So the Nasdaq crossed over into bearish territory a couple of weeks ago, including on the RSI. And the MACD is almost with this flattening right here, and this suggests a little bit of a momentum shift that the MACD is almost on the verge of crossing back over to the upside. I think there is a lot of FOMO. I think there's a lot of people that are afraid to miss this next big rally that the Nasdaq could have. This next 3-4 week, maybe 2.5 week move to the upside that could be really big. This is about 3 weeks right here. This is about 2.5 weeks right here. This is about 2.5 weeks, maybe three. I think there's a lot of people that fear missing out on that and think that tech stocks have been beaten up enough, and that's why you might be starting to see some momentum shift here in the MACD indicator for the Nasdaq. So we'll see where that ultimately leads us. Whichever directions the markets are going, I hardly care because we've got mostly really great stuff going on with our open trades. I'm going to start with the triple play stuff, and then we'll talk a little bit about callers and other spread trades. Hopefully, most of you are out of the snow trade that we got in. I took a smaller profit than maybe I could have got. Jumped out, got a little under 7%. I'm back in now, and I know most of you that follow closely are as well, with some different strike prices. The problem with snow is that they moved down so far that going into the earnings report, they would have had to not just hit a home run, but it would have had to been a grand slam home run, in the bottom of the ninth inning to win the game for them to go up high enough. The challenge with Snowflake, is that they had gone down so far. Even good news may not have been able to push them back up far enough to get you to a guaranteed profit on the type of trade that we have on. When we opened the trade, we were in this range, and we wanted post earnings a move down in this direction or a move up in this direction. Well, they went so far down so fast in a couple of days of trading that our put side of our trade was completely in the money, and even a good report might have only moved them back up into this range, which is where we would not want them to be. It's like anywhere but there is kind of the mentality. So we reset with short options that look more in this range now, so that good news or bad news, we should be able to push beyond our short put or our short call strikes pretty easily once they report, and their report is coming tomorrow after the close of trading. So we're not going to get anything on them today. They've got a little rebound today, up $3 a share right now with about 5 minutes left to trade. But that puts them right here at this 160 mark. And we're positioned to where they only have to go up 167.50, which is an easy reach, 150.250 on the other side, which if they lay an egg or disappoint investors, believe me, it will be easy for them to hit that low number without any hesitation. Excuse me. So that's where we're at. We also entered a Coreweave trade. Our Coreweave trade. Here's. I know I'm going to get some people ask me this, so I'm going to address it in advance. Here's what's a little bit different with the Coreweave trade we put on. So we put on this Coreweave trade, and on the call side of our trade, we've got 95-100 strike bull call spread. Well, if we go to this chart of Coreweave has had a couple of days in a row now, assuming it doesn't in 3.5 minutes sell off almost everything it's gained today. Coreweave is up another almost 10% today, and this is the second pretty big, even bigger move than yesterday, a big move up today. We only need Coreweave to be up here over $100 a share to guarantee profit on the call side of our trade, but we would need them to go clear down here to 80 if they were to miss. Here's why I'm not worried about this. If this was happening in the other direction, like Snowflake had done, I would be worried about this. I would be worried about, could there be a good enough earnings report to push them up and over 100 if they were way down here around $80 a share now? And I would say probably not. There's probably not going to be news good enough to satisfy investors such that they would push it up over 100. But now, any good news at all has an easy chance of pushing them up over 100. But if there's any bad news, if the report is perceived as not being good enough, I think it'll be a piece of cake for them to fall below 80. When things fall, they tend to fall much faster than when they rise. Not always, there's exceptions, but generally speaking, when a stock gets hit with some bad news and the stock drops, the drop is usually much, much faster than when stocks have good news and they take off to the upside. There are exceptions, but that's generally speaking what happens. So I'm less worried about the fact that both of our calls are nearly in the money, because I think the reach for the put side would be, and in fact the puts would only our short puts are actually at 85. So it only needs to fall down to here with some bad news, and I think that'd be so easy for it to do. In fact, I think it would be almost nothing for it to fall down that far if it starts like. And with Coreweave, we have until the end of next week. We're not worried about an expiration this coming Friday. Last but not least, Nvidia. Nvidia is going to have such a perfect earnings to not fall that I think we're set up really well with Nvidia. And I purposely on Nvidia we only did a $2.50 spread on Nvidia. That was very intentional on either side of the trade, because even with good news, this is a really strong level of resistance right here. With bad news, we could so easily, and I think we will, break right down here to 80, maybe be on our way to 70 again. Maybe not on the day following the report, but we've got 2 full days of trading after the report tomorrow night. And I think if there's a drop, it'll be a big drop. I think we'll be right down here to, on this one, we only need to go down as low as 185. And, that's right here. So I think we'll come down to 180 almost in a blink if Nvidia misses. That's $12, that's 6%, and they're expected to move much bigger than that. So I think we're looking fantastic on our setup right now for our triple play spread trades. Our regular SOS spread trade, I sent it earlier today. And there's the closing bell. I don't know if you heard that because I've got speakers like headphones in my ear. But the market is officially closed now. With Home Depot, we closed the Home Depot trade that we opened last week. Got a 15% profit out of it. This was set up for the earnings report this morning, but as of yesterday, being able to get out with 15% and not having to worry about the earnings made so much more sense to me than staying in. So we took that money and ran. And then today, and you can get into it tomorrow if you didn't see it today, a new Home Depot trade, which is an in-the-money bull call, and we're at the 380, 375 strikes. Let me show you how this looks on the chart. Here's my thought process behind the Home Depot in-the-money bull call. Now, the only thing I don't like about Home Depot's chart right now is that they finished kind of down here at the lower end. Let's move that over a little bit like that. They finished down here. I just learned something, by the way. I didn't know I could pull that chart and create that white space to the right of it. Now that I know I can do that, I'll be doing that more often. I don't like that they finished down here towards their low point of the session, but they still had a good day. They still had a good report. They made some comments about sales missing a little bit, but the company's in good position. The economy is easing. The economy is getting better. The housing market is still tough, which means people are going to still be putting money into renovations and upgrades and repairs. And I think this is a very strong level of support. Do I think it'd be impossible for the stock to break through and go below that support? No, not at all. Yesterday's proof that it could do that quite easily. But look how fast it bounced, way back up. I think if you look at the last let's call it month and a half. I might be off a little bit. Last full month. Last full month of trading, the majority of Home Depot's volume has been above that 380 mark. And after this morning's report and the way the market interpreted it, it's hard for me to believe that won't continue. I think Home Depot avoided technical crossovers here. You can just kind of see right there the RSI, the MACD. They're on the verge of crossing back to the upside. We've got a 375 long call, 380 short call. So it's a bull call spread that's already in the money based on where it's at. All we need to do is between now and I'd say about the middle of next week, we just need to be trading above 380, 380. The higher above 380, the better. Because we got into this trade, what I feel is really inexpensive, down around $3.50 a share. We get 340 or excuse me, 445, 450. We're making like 30%. I would take that and be out of it in a blink of an eye. I would take 30% and jump out on this thing without hesitation. So that's the new trade for the week. On collar trades, we're pretty set on collar trades. Someone reached out to me on Discord and asked about adjusting Palantir, pointed out that there were some great profits right now in the in both the short calls and the long puts. I agree wholeheartedly, but our expiration is out at 320, and Palantir, they don't look like they're done going down. They're getting as beat up or more so than almost any of the companies that we follow and that we watch closely. And they look like maybe, they looked like they were flattening there, a little bit of a move up, one bad day, another up day. And I started to think, wow, this is going to turn the corner and cross over. And then now you're looking at, 3 of the last 4 days, they're down a little bit. I don't think they're going to go a lot lower than the low they hit here in that 125 range. But I'm not prepared to think that they're going back up yet. So I'm going to leave this one alone for just a little bit longer. The rest of our collar trades look pretty good where they're setting right now. So I'm going to preserve my voice a little bit and wrap up right there. I actually took a few minutes longer than I thought I would today. Like I said, very glad to be back online. Thank you again for the well wishes. Tomorrow, I'm not going to be in front of the computer anywhere near the close of the market. My plan is to do a podcast tomorrow, but it's probably going to come a little bit later in the day, kind of a early evening type thing. So I'll be watching the market. I'm going to basically be watching it from my phone as I have a couple of appointments in the early to mid afternoon tomorrow. So have a great rest of your Tuesday. Have a great Wednesday. Be back online doing a podcast tomorrow. Thanks everyone. Bye bye.